Well, I think it's very positive and in the right direction, and you'll understand that we've had the West African Monetary Union, which is dominated by the Francophone countries with their CFA. That's been established over the last 50 years, and it's been there. So the whole essence now is this, to be able to look at the Anglophone countries, including Guinea, to be able to set up a union which eventually will form the merging of both unions to form a currency which is called ECO. So the whole essence of financial integration of not only the currency but also the financial markets, the securities markets, is something that has been done successfully with the European Union and the emergence of the euro currency. So in West Africa, we're taking a look at moving along those lines, and things are moving quite well.
But when you look at these moves like this, you know, small steps, I would say, but you know, would you say we're inching closer to getting a single currency on the continent? Yes,
definitely. Not even the continent. I think it's even better to start from the regional side first. Let each trading bloc across the African Union set up this stage. We have a new Continental Free Trade Act, which is also in the positive direction to drive these things. But within West Africa, I think we've made tremendous progress that we really don't think about. Trade has been growing at an average of 20% per annum for the last 10 years. So that's quite impressive. And our trade levels are now at about $210 billion. And most of that trade is dominated by Nigeria, Cote d'Ivoire, Ghana, and Senegal. So you see two Anglophone countries and two Francophone countries who are dominant in trade within the region. And clearly there is need for integration. At the informal sector, especially at the borders, you go to key markets along West Africa and currencies exchange freely. So you find that there are markets in Nigeria where cedis are readily changed. There are markets in Senegal and Ghana and Cote d'Ivoire where you have Naira that is also being exchanged. And you find some very big Nigerian communities and also Senegalese communities across the region who have been trading informally and across the border. So regional banks, and you find most banks, Nigerian banks and other West African banks, are already involved in this trade. They have branches all over West Africa, and they're helping to facilitate trade. So it's quite impressive.
Quite impressive. So I would also like to comment on the, you know, we see this is the impact on trade, yes, is going to be enormous. But, you know, I've listened to many conversations around trade in Africa and the fact that countries in Africa we don't even know what our neighbors are. So trade information still remains a problem there. But then we're bringing in this new move where we're going to be having, you know, exchange of currencies. Do you think there's enough awareness created on, you know, the value of currencies within the region?
A lot of work still needs to be done, at least from the formal sector. Within the informal sector, those who are involved in that trade are very active. For instance, a lot of the production, Nigeria is dominant in trade, probably accounting for about over 75% of trade within the region. Ghana is about 10%, Cote d'Ivoire about 10%, and Senegal about 8% of that trade. A lot of the Nigerian manufacturers here who are manufacturing products are pushing their products across West Africa through informal distributors. So at that level, they understand it, and the regional banks are facilitating that trade with all their branches in various countries. But right now, I think it's important, like you said, to begin to raise the awareness, not only for those traders, but also the formal sector, and also, more importantly, for tourism, which will begin to increase the trade volumes. But right now, at about $210 billion, it's pretty impressive.
But what implementation hurdles do you foresee, you know, with this move?
Well, first of all, you don't forget West Africa is split into two, the Francophone and the Anglophone. So clearly there's some language barrier. But ECOWAS has been quite successful over the years in bridging that gap. So when you have if you take a look at how long it took the European Union to get into the euro, so it's probably going to take us a lot longer to get into that currency that we call the ECO, because most countries are very conscious about giving up their sovereignty in terms of releasing their currency and accepting a general currency. So that is a big hurdle that we still need to overcome. And I think that is really where the challenge is, because you need to now begin to integrate the central banks. And that is really where you're going to have a big challenge.
Yeah, there even talks about capital markets as well being integrated, even insurance companies. What's your thoughts on this?
Well, I think it's all fair. I think we've seen a model. The European model has worked very well for for the European Union, and they're a very powerful trading bloc in the world, and they're able to negotiate with America. You've seen how Airbus has begun to compete successfully with Boeing. Previously, you had smaller aircrafts, British Aerospace, you had Fokker. Now everyone has consolidated into Airbus, and now they're competing effectively globally. The more we begin to realize this, I think, and the benefits, I think will begin to come together. So it's a question of time.
We're seeing the DFIs are playing a major role in making this come to bear. We're seeing the African Development Bank started this started with some funding to get this on board, and we're also seeing the Afrexim Bank also now coming in here. You know, I'd like you to speak to the role of DFIs and what they can do more for trade within the intra-Africa trade.
Well, if you take a look at also the African Finance Corporation doing a lot of infrastructure work across Africa, with other African countries being members of these institutions. The African Development Bank, of course, has been more than established and have taken the leads in that. Afrexim is there. So you're having all these regional development finance institutions whose subscribers are African countries themselves. So they're believing in those institutions, and since you have a coming together with the African Development Bank and African sovereign, they have the best position to be able to promote these things, because right there and then within those institutions you have an existing membership where Pan-African countries have worked together over the years in developing their financial systems. And of course, most of the member countries have benefited from loans to develop their capital markets, their industries, and the extractive industries, especially from the African Development Banks, and more recently now, Afrexim.
I can imagine the role of innovation and technology, you know, in trying to break down the barriers to trade on the continent. I'd like you to speak to this point.
Payment systems, fintech, without a doubt, I think is really the driving force now today. Easy payment systems, technology-driven, is breaking down borders and breaking down barriers. And so it's making the seamless payments across board. Once you have seamless payments, then you're going to facilitate trade.
All right, then, so we'll keep our eyes and see how things play out. Thanks for your time.